Pat, welcome back. Welcome back. Happy Friday indeed.
Hey, Rick, how you doing, sir?
Oh, I can't complain. Been a wild whirlwind, a wild week, I guess is what I'm trying to spit out here,
Yeah.
especially on your end. I don't know how you do it, but
Yes.
I
So,
thought today we'd take another look at some of the numbers and the data like we always do, but I want to do a little bit of a deep dive as to why I look at certain numbers. And I want to start out by saying I see a lot of comments on YouTube on not just my channel but many other channels related to real estate. And some people kind of chew us out, or they make a snarky comment that say, "Oh, those realtors, they just want you to buy. They don't really care what's going on," or these realtors want you to believe this, and this. Now, you're going to run into some that do that, but I think you shouldn't rely, if you're thinking of buying or selling, you shouldn't rely on a real estate agent or your barber. You should know the numbers yourself. So the goal of this channel is to show you the data, and it's real data. There's no agenda behind it.
mhm.
It's the actual real numbers, and tell you what's going on. And I've got some national headlines that I'm going to kind of debunk as well, because there's always a devil in the details, right?
Mhm. Mhm.
So, so I thought I'd jump in. Let me check my screen here for just a second. Um, One of the first things that I want to jump in and look at here is I'm just going to take a look at what people said last year about this year.
Oh yeah.
And here's Realtor.com's 22 forecast for the key housing indicators. Existing home sales are going to be up, sales appreciation 2.9. We were up 4% last month,
Yeah.
right? So
Mhm.
good afternoon. And existing home sales up 6.6. But you'll like this, Pat. Mortgage rates average 3.3% throughout the year, 3.6 by the end of the year. And where are we today? We're sitting at about 4.5.
Yep.
It's March. I mean, their prediction is already toast.
Yeah. That's good. That's a good point. I mean, it's just predicting is really just it's a hard game. You know, 9 out of 10 people don't, because obviously everybody wants to make the right decision. But I think what you said as far as I think people are, you know, trying to figure out what is the right decision. You have to take that based on, I mean, right now, obviously, if you're looking at a house and if you're going to, rents, bottom line is you have to look at the facts of what will probably happen. I mean, rates, the way it's looking right now with gas prices, inflation, they're saying inflation. I think inflation's over 10%. Oh, I think the numbers are, did we lose you? I think I lost you,
No, I'm
Rick.
still here.
Yeah.
I'm still here.
Okay, there.
I was just letting you take the floor.
Oh, God, thank you. Wow. Wow. You always, yeah. But I mean, I think people just have it's a crazy market out there. I mean, it's crazy from the fact that people say when it's crazy market. I mean, you've only got what 4,800 homes. So it's not like homes are flying off the shelf. I mean, they are, but
Yeah, and I'm going to dive into some of those numbers here too, because one of the things I do want to point out is you'll see articles that come out like in azfamily.com or everyone today. They were talking about real estate, and they said that our inventory was over 8,000 homes, and that's all we had, right? And you're seeing me up here put down that we have 4,880 today. So where's the 8,000 come from? If you add under contract and you add those in together, now you're at 8,300 homes. I don't count under contract. They've already got a contract on them.
yeah,
So I'm
yeah.
saying let's go out and look, and we're at 8,800 homes. And um, the other thing, getting back to the other predictions that are out there, check this out. This is wild. Some predict double digit growth. Zillow is saying we're going to be up 16.4. Goldman Sachs says we're going to be up 16. Fannie Mae says we're going to be up 11.2. And then uh, National Association of Realtors. I don't know where they get this number, but they're expecting prices to climb 5.7.
Yeah.
And Realtor.com, 2.9. And then Redfin, 7%. So you see that and you go, yeah, Tyler, thanks. I know it's confusing. And then what's also confusing, I keep using the word MLS, it's multiple listing service. And
Yeah.
that's a service where all the homes go on and, we're held to these standards on there that the information has to be accurate. They don't have that in New Zealand. They don't have that in Central America. You can list your house with 8 different realtors if you want in some of those countries. Um, but then you're going to see this sales of U.S. previously owned homes decline to a 6-month low. So you look at that on the national scale and you go, well, here we go. We've got
Mm-hmm.
a 6-month low, right? There's your headline. This is Yahoo Finance. Well, let's take a real look at that here locally and see what it looks like. This is the number of active listings. So last March 2021, 2,628 active, and today 3,194. In this right now, February, 6,147 homes sold. February. Was that lower in the past 6 months? Yes, indeed it was. But you got to compare February to February. So let's go back to last February. And last February, 6,000. So we're 100 higher. The February before that, 5,931. So we're higher now than we were
Mm-hmm.
2 years ago. And it goes on and on. So you look at that headline and there's 5,154 there. So I used to have a general manager that when I was in the baking business, and guys go, well, we're not selling anything out in Palm Springs because it's hot. And he would say, well, how hot is it compared to last summer? In other words, when you spit out a headline like this, um, sounds to me like you have an agenda,
Yeah.
right? I mean, does that make sense? Because
Yep.
and it's by Bloomberg,
Yeah.
6-month low and fell in February. Well, it does every February. So show me what's going on in rates, Pat, because this is a wild week.
Yeah, this is actually a max chart from 2017. This is the farthest I can go on MBS Highway. This is a chart. This is the system that I follow. Obviously, we pulled this up here last several months, last year or so. But I mean, this is 2017 all the way to. I remember I told you a couple weeks ago. I really think this 2022 is going to be like 17, 18, where the Fed. They're saying Fed can hike. You say here 8 times, 10 times, 12. I saw one Fed said that they want to see the federal funds rate back to 3%. But you see this where we saw this kind of this was 17 when the Fed was raising rates, and it was just a painful, just the whole year. I mean, it was May, April, rates went down. This is an inverse relationship. I know once again, this is the price. So as prices go down, rates go up. So this is almost a whole year. And you take it, and I liken it, I take it here, kind of look, project, okay, what kind of scenario do we have in front of us? Okay, we've got this action here with the rate, falling off. Rates have fallen off, have gone up the last 3 months down here, right? And we got the Feds looking to raise the rates, several times this year. So I'm just, everybody's looking for a prediction. My just overall picture of everything is the Fed's going to raise rates. We got inflation. We're sitting right now, the 30 years at about 4.5. I compared a $475,000 loan at it was at 3, like I'd say at 3 7/8. Now I'd say 4 5/8, 4 3, right around that range, 4 5/8. It's on a $475,000 loan with 5% down. You're looking at, say 450, give or, whatever the number is there. You're looking at about $100 a month difference in the rate increase from 3 7/8 to about 4.5, 4 5/8. So, I think it's, just I'm looking at it from just a pure simplistic standpoint. Obviously, rates go up, the payment goes up. It's going to knock out those fringe buyers. Now, the people that are making enough money, they're making, dual income. One person's making 65 to 70,000, the other one's making 65 to 70,000. They got no debt. $100, $150, $200 a month payments. It's going to hurt, but it's not. If they still want to buy a house. But it's going to knock out those fringe players that, have got the debt to income that they're really close. that you
Well, you
bump it up.
mentioned 2017 and 18, and you can see here that even though the rates were really starting to climb up,
Hmm.
you didn't see a change in the existing inventory.
Yeah, yeah. Now, obviously,
So,
prices,
right?
one to refute that. I mean, race prices have gone. I mean, obviously, the average price on house has gone up. Um, since 2017,
Well,
18.
yeah, no doubt. But what I'm pointing out is that, here you had this huge spike. They called that the taper tantrum.
Yep.
Sales kind of slid down, but inventory didn't go. And we're down here. We started to climb up a little bit. And now we're right back down to 2021. And we're not climbing up. One of the things that I want to show, well, what let's see, before we get to the Cromford data, when you're looking at rates right now, do you think we've priced in above the Fed action as an overreaction, and that maybe we'll
Well,
see some settling, or
yeah,
are
we'll
they
see. I think
starting to price in the future ones now?
I think they're obviously pricing in the future ones. I mean, that's what they're saying is when the Feds actually do raise rates, that the rates, the mortgage rates, because obviously they're tied indirectly. They don't all boats kind of rise with the tide, but they are pricing ahead of now that they know the Fed is going to be raising rates. But the only big question is how what are they going to be doing on the mortgage-backed security market in terms of buying. So I still think we got you know it's priced that in, but also I think we could see if we see rates obviously. Right now, I'm seeing 4 3/8, 4.5. I know, guarantee other banks are quoting 5, 5 1/4 right now. So, I mean, I think if you're going to start to see some things slowing off if we get the overall market, the mid fives. That's going to start tapering into people. Once again, you got so many things. You got people sitting tight. They got the people that refinance. Once again, my theory is we got just a logjam of stuff. Inflation. We got inflation going on. We got rates going up. We got people that have refinanced already that are sitting at 2 7/8, 2 3/4 on their house. They're not moving. They're like, why
No,
should I
no.
why should I sell my house, get $300,000 equity, but now I got to pay a higher rate. I got so that is a big log jam that I think is causing because we don't see the velocity of people moving up, taking their equity and moving up. They're just sitting tight.
Well, and we're starting to see some of the numbers change here too, Pat, in the Cromford data. And one of the things they point out is it's happening slowly. So see all these red arrows? That
Hmm.
means their Cromford market index went down, like Fountain Hills went down 6%. But 8 of the 17 cities have improved for sellers and 9 have deteriorated for sellers. And that sounds drastic, right? But although this indicates the market's gradually cooling, it remains extremely hot, and the cooling trend is about as weak as it can be without becoming no trend at
Yeah.
all, says Michael Orr with Cromford Report. Here's what's important. At this pace of change, it would take several years for the market to reach normality. So if there is a huge spike in rates and that there is a drop off in sales, it'll show up first in that listing number. It'll show up first in the way we track it here, which is the red line is number of homes under contract, the blue line is number of homes available. And even though we see that little tiny dip there, it's still higher than what the rest of the year has been. And this arrow here is last year. So, there's a lot of ups and downs on a 7-day moving average. But they go on to say that we need to remind ourselves that Cromford Market Indexes over 110 indicate a seller's market where the prices will rise faster than general inflation. Between 90 and 110, prices tend to rise with inflation. Below 90, home prices tend to fall off or at least rise slower than inflation, which has become a significant number over the last year. So if we get this thing all the way down to 110, and look at Fountain Hills, they're at 646, prices are still going to be going up. And it says here home prices will not fall without a good reason. Few homeowners want less than the top price for their home. And I didn't quite understand this comment. He goes, the weakest hands are always homeowners who wish they did not own the homes in normal markets. These are banks and other lenders. However, these organizations have an extremely low inventory of homes, so they're close to irrelevant. I think he's just talking about foreclosures, right?
Yeah. Yeah.
The idea that home prices will automatically correct is a silly one. The housing market is not like a stock market. You've said this over and over again. or the balance between supply and demand can flip several times a day. The housing market moves extremely slowly. The last
Mhm.
time the CMI was below 110 was January 2015. The last time it was below 90 was November 2010. So the last buyer's market was more than 11 years ago. This is normal for the housing market, and it's quite possible that the next buyer market may be many years away.
Mhm. Yeah.
So people talk about how fast the crash happened in 2008, right?
Yeah. Yeah.
But all of the indicators were there in 2006, all
Oh,
of
they
them.
totally were. Yeah. They totally were. I mean, I saw it before it started hitting. I mean, I'm telling you, Rick, I mean, that's why people you can get the Jim and internet warriors say, "Oh, we're going to see a crash." Well, tell me, give me, just because we saw a crash in '08 doesn't mean just because somebody got divorced once doesn't mean they're going to get divorced again. I mean,
Yeah, yeah.
yeah, it's like, they're saying, "Oh, you got divorced, so you're going to get divorced again." It's just like that's, there's no but I saw it. I saw it with my own hands and my own eyes, the crap loans that were being written, and
Oh,
it was
yeah.
just,
I've got a story about that as well. And I got
I mean,
Thomas
yeah,
has a question here. Have you talked about supply chain issues with lack of building materials preventing new builds? Yes, I have. It's tough. It's going to be a year and a half before you get in that new home. The permits that are out there are still not enough to make up for the number of homes that we need in Arizona. In fact, we have more permits of multi-family housing than we do single family housing, and a lot of them have actually stalled their projects waiting for materials to show.
yeah. Well, it's yeah, the builders, that's not helping anything before you could, build and, take some of that pressure off there. Obviously, permits are been bouncing around. Um, there are just so many factors that are just biting into this whole market. Like you said, it's just so unusual. I mean, like you said, the reason we saw the crash in '08 was just crappy loans. Yeah, I mean, there were so many crappy loans being written. It just,
Yeah, yeah.
it was unbelievable. But we got solid loans. We've got demand. Once again, I saw somebody a piece the other day saying this. I mean, once again, it just comes down to supply and demand. And if, like you said, I think we are going to be around for several years.
Yeah, and be careful listening to realtors too, because look, if the realtor's not giving you some real data, then they're just pontificating. And I think I lost you there, Pat. I'll remove you here until you come back. Um, One example is I remember my ex wife was the realtor was selling her a house with a ridiculous mortgage, and it was right when things were peaking, and I called it the silly season. And she literally told her on the day that they closed, "Congratulations, you already have 40,000 in equity." And got you back. And she said, "You already have 40,000 in equity. And by next year, in 5 years from now, you'll have well over 150,000 in equity and you can move and do whatever you want." And I'm thinking, based on what number were they seeing? Because I had a realtor telling me this before I even got into business. This is just a temporary correction. We need to squeeze out the excess. And
Mhm.
those are the ones that aren't doing you any favors.
Yeah, exactly.
And
Exactly.
so even the Cromford Index here comes out and says, um, with the CMI in the table above 270, this is not likely for a very long time. And some of these were to drop below 150, then we might be a few quarters away from price stabilizing. At the moment, this is at least 12 months away, even in the most negative scenarios that we can imagine. So these are the data folks that are saying, even if we look at the most negative things, it's going to take a while to change these numbers. COVID changed everything. I don't think homes or rent will ever be affordable or cheap again. Going to be really hard to tell. But if inventory starts flying up, and it will one of these days, either we're going to
Think
have more builds or buyers are just backing off. But there's going to be denial when it gets to where it's a buyer's market, Pat. The news will be negative and
yeah.
people won't want to buy.
Yeah. Oh, yeah, I've seen it. I mean, when you hit a bottom, I mean, when you hit a short-term bottom, people are like, "No," because once just think about this, when let's say things get back to where we do get a 6 months back to a 6-month supply, because we're at what, a month supply right now?
We've been in less than a 2 month supply for 10 years. But we got about 2.5 week supply right now. I mean,
Or two and a half, yeah, two.
we have 4,100 homes on the market in the past 7 days. Let me look at the number here. I'll scroll down, and these are actual listings that come up. So 4,000 come up and 3,900 go on the market. So if we've got 4,800 homes on the market right now, and we're putting 3,900 of them under contract on a weekly basis, we have less than a 2 week supply.
Yeah. Yeah.
Normal 6 months, right?
Yeah. Well, at least what's the average person if we do go from 2 month supply, 2 week supply, to say over a 4-5 month period, all of a sudden we get to a 5 month, 6 month supply. What are people going to be saying then? Like, oh my God, there's, it will be there could be that slide then because nobody's going to want to buy then.
Well, the headline is going to be inventory is spiking. Everybody's putting their homes on the market. It doesn't look good.
Yeah. 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 It's going to just take that whipsaw the average person. I mean, like you said, even if we saw a 50% decline in homes back in, from top to bottom. I mean, right now, a 10% slide would feel cataclysmic, or how's just catastrophe, catastrophe. One of those words. Yeah.
Yeah.
So,
well, now keep in mind, before the crash of 2008, 2006, and 2007 had inventory levels of a year and a half supply.
Yeah. Yeah.
And people were still buying, mostly because loan. So these crash videos that I'm watching, I never hear anybody say anything about the loan products. Not one guy, even Mr. We're going to crash by 40, 50%. And he shows you a chart that compares how fast he went up and how fast it went up. And I'm like, okay, well, but tell me what made 2008 crash. Don't just say that it crashed, therefore it'll crash again. And
why did it crash? Because there's people had no equity. They're buying 4 or 5 homes on 100% financing with 620 FICO scores. And once the market started sliding down, I knew guys who had 4 or 5 homes were like, they're done with them. They just let them go.
Well, the foreclosure home that I bought in Fountain Hills was purchased from a guy who did what was called a strategic default. He had another house built, and then he just let that one go.
Yeah,
and let the bank take it.
And once again, it just does not fly in the face where the demand is so high that I think the demand is so high that even if we do see a softening in the market, the demand will overcome any type of softening.
Yeah. So, I mean, eventually it's going to, the market's going to correct itself. I mean, it's really out of balance. It's really out of whack right now. We just don't know when. All we can do is look at these numbers and wait for something to change. And I for sure thought that this January we were going to see a lot more inventory, but it's just not, it doesn't exist.
Yeah.
It's getting worse. We are lower this week than we were last week. And with that, so here, get this. So trying to find a condo for a young man under 275,000, you can imagine the beat down that is, right? So this condo comes up and it says it's a coming soon. It's owned by a real estate agent. It says it's coming soon, can't be viewed until today. So I make an appointment to go see it today. And I checked the MLS on it yesterday morning. Well, first I send the agent a message. I go, you say it's in a gated community. Do you have the gate code? And he goes, oh, the gate's open most of the time. I said, okay, what if it's not? He wouldn't even answer me. You know what? Like, I just don't think he knew the gate code. So I looked on the MLS yesterday and it said multiple offers received. And I'm like, I thought it wasn't available till Friday. It was coming soon. Well, the moral of the story is don't trust coming soon listings anymore. That's the second time in 2 weeks that's happened to me. And then they canceled my appointment. They obviously accepted a contract. And what I think happened was there were a multitude of investor offers sight unseen.
Yeah.
And because it's in that sweet spot, that under 300,000 in a desirable area to turn into a rental. But the lesson learned for me is don't don't trust that coming soon. And even my good friends that listed their house, they weren't going to list it until I think April. They had 4 people beg him to see the house, and it was over 600,000. And he sent me a message and said, "We let 4 people in because they were begging us." And they got 2 offers, and they had a third one coming, but they went ahead and accepted the second offer. So it didn't even hit the market, Pat.
Yeah, I mean, that just once again, that boils a story like that boils down to supply and demand, pure supply and demand. So, yeah, I mean, people can argue about a crash, but there's just we are in the millennials, the 30 to 35 and 40 sums that have got, they're lucky enough, maybe they've got, they put money away, or they've got maybe a gift fund from relatives, because a lot of the baby, their parents maybe are gifting them 20, 30, I'm seeing that, 20, 30, 40, $50,000, or the parents buying the house for the kid. We just got all these, that what's kind of ticks me off is these investors are just, they're, these investors are, they're whacking the market out too. I mean,
Yeah,
because a
and
lot of
speaking of
Airbnb.
investors buying condos, I want to share this news story with you because I've talked about this before. If there's a high percentage of investors in a condominium, they can vote to make you sell your unit to them and convert the whole thing to apartments. And here's a story, Pat, from Fountain Hills. I'm going to put it on play here, I think.
Tonight, a group of Valley homeowners believe they caught it in time to fight back. All new at 6:30, ABC 15 investigator Courtney Holmes shows us the neighbors who are banding together to keep their condos out of investors' hands.
We just couldn't believe how beautiful the view was.
With killer views and a great location, there's a lot to love about Katie Saunders' condo.
2 bedrooms and 2 baths, and enough room for all our collectibles.
Her brother-in-law, Mark, and his wife bought it specifically to provide Katie with some housing stability and keep her expenses low.
We purchased it strictly as a rental for our family.
So when a neighbor told them that plan might be in danger,
that was exactly the opposite thing we ever wanted to hear.
Four Peaks Condominiums in Fountain Hills has always been a mix of renters and owners, with the biggest being the Canadian investment company that built them. It also controls the HOA board, something neighbor Amy Wattier was hoping to change.
This is a dream vacation spot for us.
She and her husband bought their place as a second home in 2015. Last year, she and others pushed the one-person HOA board to turn it over to the rest of the homeowners.
We then received a letter from his attorney listing the names of those that were selected by the nominating committee.
On that list were some names that Amy knew, but there were a couple that she didn't. When she found out who they were, she panicked.
I learned that these 2 individuals were actually managing principals for a company named Rockwell Property Company in Chicago, Illinois.
Public documents show in February, several units were purchased by LLCs that go back to the Chicago address of Rockwell Property Company, the same company that's come into condo complexes around the valley, acquired 80% of the units, and forced the other 20% to sell as allowed by law. Then convert them to apartment rentals. Right now, the legislature is considering a bill that would force investors to get all of the units in order to terminate a condo.
Amy and the others are lobbying legislators to pass it. Until then,
what we are trying to do is prevent the investors, these big investors, from basically coming in and taking over the Homeowners Association Board of Directors.
the first step, getting
Pretty wild, huh?
Yeah.
So, and I've seen that before. And
Yep.
so now, but they were showing you there is that they have bought several other complexes. So when you're looking at a complex, you better find out what the percentage is of non-owner occupied.
Yeah, like I said, that's why condos are so, they're obviously with the stuff that happened in Florida with the collapse of that. So the condos are just a tricky animal. I mean, bottom line. So
Get asked
But-
a lot about water here in Arizona too. Check this out. There is a desalinization in Arizona. What you should know as an inventor gets ready to test a new technology on the Buckeye Aquifer. So the governor has signed into a bill putting aside $1 billion to bring desalination here. And our goal, secure Arizona's water future for the next 100 years. So this guy is saying that there's a big aquifer under Buckeye that has water that goes from Colorado River or whatever down to the Sea of Cortez, and it's very salty. So he's going to experiment with building a system to desalinate that water that's under the ground here in Arizona. And instead of running a pipeline from the Sea of Cortez and bringing it up here, he's saying it's already running underneath us anyway. Let's tap into that. So I thought that was pretty interesting. And then the last thing I got, your distracted coworker is probably on Zillow. So that coworker that's home on a Zoom call, he's spending a lot of time, according to the stats, looking at homes in different cities.
That's funny. But you know, just to sum it up for me, I mean, it's obviously it's going to be a crazy market. Rates are probably going to go up higher. I mean, and I think people just, if they are truly looking to buy a home, they've just got to, like you said, knock out the noise. They got to position themselves the best way to be able to purchase a home, whether it's, talk to your relatives as far as getting gifted funds, to help. That's, I mean, I think
look, if housing takes a dip and you're sitting there with a fixed mortgage, then just sit back and watch it. I mean, it'll roll back because it's all about the payment. Your house can go down 40%, but your payment's going to stay the same.
Yeah.
And
I mean, it's
unless you were planning on moving in 3 years, don't get an adjustable rate right now. Just sit still.
Yeah. So but hopefully cleared up some of the mud.
Well, there's plenty of it. So, well, Pat, glad you made it and take on the weekend. Oh, hey, how was the St. Patrick's Day parade? Did any subscribers wave at you?
No subscribers, but maybe they were. But I just couldn't hear them underneath my my outfit. But it was a good crowd out there. It was fun. Yeah, it was good.
Yeah,
had a good time last
night. The weather was great.
Yeah,
spring training's back. Yeah, everybody enjoy the weekend.
Alrighty.
Talk to you later, Pat.
See you.
Bye-bye.